You're live. Good morning, Wiser Nation. Good morning, Nation. We are live. We are live. We are live. We are live. Good morning, Wiser Nation. Oh, wow. We are live. Good morning. Good morning. Good morning. We are live. Share the link with your friends. COUSD yesterday eventually traded above the close. Yeah, eventually traded above the close during the PM New York session. Wow, that's cool. That's cool. That's cool. That's cool. Okay. Hey, morning, Francis. Share the link with friends. We're live. We're going to analyze what EOUS did yesterday in a minute. Okay. Right. Okay. I want to say this to us as a psychology. We're not going to listen to our affirmations this morning. So, what I want to give us as a psychology arc is the mindset of abundance. You see, when you are worrying too much about money, when you are worrying too much about the profit you want to make, all right, it goes far away from you. So the more you are worrying about making money from the market, the more you are worrying about opportunities, the more it is going to be far from you. But when you have the mindset of money is abundant, trading opportunities are abundant, the market presents limitless opportunities. This mindset helps you to even spot opportunities better. So, my psychological hack for us this morning is embracing the mindset of abundance. Let's type that in the chat box. I embrace the abundant mindset. I have the abundant mindset. Rather, I have an abundant mindset. Let's type that in the chat box. I have an abundant mindset. I have an abundant mindset. Money is abundant. Opportunities in the market are abundant. I have an abundant mindset. Very important because this is what makes traders have fear of missing out. What makes you have fear of missing out is because you are thinking in scarcity. You think that because you have missed that trade, that's omo, it don't be you. You think because you have lost that opportunity, because you have made that mistake, because you have blown that account, that's the end. I asked myself a question. If I had won that trade, if I had passed that challenge, if I had made that withdrawal, will that be the only profit I will make? Will that be the only account I will pass in my life? No. There are still thousands and millions of trades in the future. So this morning we are embracing or reminding ourselves of the consciousness to have that we have an abundant mindset. Yeah, this will make you not so because we don't want to you don't want to bother if you don't trade for 1 week, if even if you miss opportunities, Monday you miss trade, Tuesday you miss trade, Wednesday you miss trade, Thursday you miss trade, no problem. It is painful. I'm not saying that it you will feel the pain. Of course, we are human beings. But I'm saying that come to your consciousness. The way you will come out of that pain is reminding yourself that market day now. Once you have that mindset, I assure you, it's going to solve a lot of psychological challenge. I've built myself to that point that I don't care. Even if I miss 1,000 pips or I miss one sweet trade, yes, I'll feel pain. But how do you respond to that pain? So it is not about what happened to you, but how you respond to that thing that happens to you. Are we together? It's about how you respond. Okay, now you have missed that trade. What next? You have lost that account. What next? You have made that mistake. What next? So it is a way of how you build that mindset that there is an abundance. So money is abundant. Trading opportunities are abundant. I have an abundant mindset. That's the vibe. See, if you carry this consciousness as a trader, you will not have fear of missing out again. I have an abundant mindset. So whenever whenever that scarcity want to trip in your mindset, just switch. No, 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 not today, not today, not today, not today. Money is abundant. The market has trillions of dollars and my own shares in it. The forex market is $1 trillion. Let me write it there. The FX market, let's say this together, is trillions. Okay, or the FX market has trillions of dollars daily. and my share is in it. Yeah. These are self talk you tell yourself. Money deal. The FX market has trillions of dollars daily and my shares in it. I've told you guys before that the market has 6 trillion daily turnover. And my mentor has taught us that whenever you are in a market and there is a market cap, ensure that you have at least 1% of that market share in the next 5 to 10 years. So if the FS market is 6 trillion daily, yeah, no, I think it's 7 trillion and 7.2 trillion, 7 trillion plus daily. Yeah. So I told myself in the next 5 to 10 years, minimum I would be what when it comes to cash flow, not capital, revenue is just 1%. I'm not greedy. 1% of 7 trillion is what? I've done the maths already. So I know my figure, I know my numbers. 1% of 7 trillion is $70 billion. So minimum of what I will be consistently making in 5 to 10 years as a revenue, because by this time I will have grown to be an hedge fund, or by this time in 5 10 years I'll have grown to be an institution. So I won't be trading as a one trader again. Definitely, I will have. So by that time, my minimum consistent, and this time is going to be. Let me just start with annually. Let's not be greedy. Okay, at the close of every year, minimum with all the losses and all the turbulence, I should be with what I know. I should be worth $70 billion. How will it happen? I don't care. So with this mindset, I'm now going to walk myself back and start doing the things that will enable me to achieve this goal. Because it's one thing to set a goal, it's one thing to do the things that will make you achieve that goal. So what we teach you in Wiser Pips is not just to set goals. Okay? We don't just teach you to set goals. Once you have set that goal, you will now come back to your current situation and be doing the things that will help you achieve that goal. If not, you just the right goal, right goal, right goal, you will not achieve anything. So my $70 billion, what type of trader will I have to become to achieve a $70 billion net worth? Patient, confident, disciplined, consistent, resilient. 5. I'll be a patient trader. I'll be confident when I've seen my setup. I'll be disciplined. I'll be consistent. I'll be resilient. So these are my 5 psychological hack I use. What kind of trader will you have to become to achieve your goal? It's always these 5 things. A patient trader. That means I will wait for my A plus setups. I have to become a patient trader. Wait for my A plus setup. Confidence. Once I have seen my A plus setup, I am confident to execute flawlessly and fearlessly. After waiting, my A plus setup, I don't wait. I have the confidence to execute it without thinking of will I make money or not. I am confident. After confidence, I am disciplined not to tamper with my stop loss and take profit. Once I am in the trade, SL or Lambo, discipline. Consistent, I am able to repeat what I have done. My last trade, I made a profit. What did I do? I applied CLT. I saw a bank level. I saw this. I repeat that same process because that was what making money. Resilient. When I have a loss, when I have a missed trade, I come back. I don't give up. So if I can do these things, my $70 billion is achievable. Exactly. Thank you. Patience, confident, discipline, consistent, resilience. So every single day, what you tell yourself is, I am a patient trader. I am a confident trader. I am a disciplined trader. I am a consistent trader. I am a resilient trader. Every day you tell yourself that. Now, I say this all the time. You might not be consistent yet. You might not be confident yet. You might not be disciplined yet. But as you are saying these words, you are attracting the opportunities, the relationships that will make you consistent. So I say this all the time that the process of your transformation starts with your affirmation. I'm preaching somebody. The process of your transformation, the process that begins your transformation, it starts with your affirmation. You want to see yourself become confident, start saying it. You might not feel it, you might still be blowing accounts, you might still feel so, you might still feel afraid, but keep saying it. I am a patient trader. I am a confident trader. I am a disciplined trader. I am a consistent trader. I am a resilient trader. See, this is a natural principle of life. Whether you're a believer or you're not a believer, there's this guy that is called Joshua Mba. His father is a medical doctor. His father told him the science behind the tongue, that the tongue has a nerve that connects to other parts of your body system. The tongue has a nerve that connects to other parts of your system. So you can use your words to change your world by your word. And of course, it's scriptural too, but it's a scientific, and of course, God owns science. So when you say it's scientific, it means it's spiritual. It's scientific, it's scriptural, it's spiritual. Okay? The power of words is both scientific, scriptural, and spiritual. So you don't joke with your words. You say what you want to see. So in this trading journey, at Wiser Pips, we don't joke with affirmations at all. It's part of our trading routine. Affirmation, 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 affirmation. All right. Okay, so let's get into the bees of the day. Hope we got one or two things there. Yeah. All right. So let's go into what we have for today. Euro USD. I did suspect this guy yesterday. Say this guy no fit just dey sell dey go now. We are in the discount of this range. The previous day high, previous day low, previous day close. Any sell now, let me give you a hack. Based on what happened on this chart, right? I want to define a principle. Based on this chart, any sell that is happening on a discount is a manipulation. It's either a manipulation or a short-term sell. Any sell happening on a discount range, write that down. Any sell happening on a discount is either a manipulation or a short-term distribution. And it happened here. This sell we had here during the Asian to London to the AMU New York in the discount zone, because we are currently here. This particular zone is below 50% of this daily range. Previous day high, previous day close, previous day low. So we were currently at the discount of the previous day range, and we saw a sell. So it's a market principle that sellers at the discounts is either manipulating for a sell side or it's just a short-term sell. Similarly, any buy you have at a premium, you see markets giving you a buy vibe on a premium zone. For example, I have in my box here. So this is premium. premium zone, and this is discount zone. Premium zone and what? Discount. So what I'm saying is that any sell you are seeing in this premium zone, sorry, in discount zone, for example, market is giving us this sell, 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 sell. This sell is just the manipulation to distribute into the premium and possibly now sell for real, right? Any sell you are seeing in a discount zone will most likely be a manipulation or just a short-term sell to distribute to the premium and actually sell, right? Then for a buy scenario, also, any buy you are seeing on a premium is just to distribute to a discount and what? Eventually buy. Yeah? Do we get that point now? So, yeah. So that's what actually happened for you yesterday. All right. So we add this cell and we add it. So let's check what we have for today. Let me take up everything. So step one, what do we do? We go to what? Daily. Guess what? Guess what? Guess what? Guess what? Guess what? Guess what, guys? Wednesday has done what? Talk to me. Created the low of the week. Wednesday has created the low of the week. Wednesday has created the low of the week. Wednesday has created the low of the week. Not only that, it has given us a CRT. Are we together, guys? Wednesday has given us a low of the week. Not only that, it has given us a daily CRT. So, sure banker, sure banker, our previous day, our daily high will be swept. So Tuesday high is the target first, first. Then we take out Monday's high. Okay. Um, are we seeing this now? Are we catching the fire? So this is Wednesday low of the week. Wednesday low of the week. Wednesday low of low of the week. So confident to take this trade to target the high of the of this day, our targets. Yeah. So we need to be confident that we are taking the buys to this guy. So we have patiently waited. Monday, Tuesday, Wednesday has taken out, has created the low of the week. What do you do? Confidence. Once we see confirmation today, we are buying. We are holding this trade till Friday because or holding this trade till the high of Tuesday or Monday's high because that's our target. Our target is Monday high and or daily candle range high. You can see that we are already distributing into the what Monday low. If you are getting it, type in I'm getting it, I'm getting it, I'm getting it, I'm getting it. EU don't set. Type in I'm getting it if you're getting it. All right. This is what we call weekly range profiling. Weekly range profiling. Weekly range profiling. Weekly what? Range profiling. Weekly range profiling. Right? I hope we are live. Okay. Are you together, guys? If you are getting it, type in I'm getting it. Sam, where are you guys? Samuel, where are you? Francis, where are you? Gideon, where are you? I need to get a response from you guys. What's up? What's up? Are you getting it? Are we together? Sammy, are you on this call? Oh, okay. Nice, nice, nice. I was about to send you a message. Right. Okay. So can you see, Sammy, can you see how we are applying it now? Weekly range profile. Wednesday has created the law of the week with CLT. Exactly. So so Tuesday accumulation, Wednesday has now given us manipulation and has closed back into the range. We expect Thursday to distribute and possibly Friday. So Tuesday was the accumulation, Wednesday was the manipulation, and Wednesday has closed back into the range. What do we expect? Thursday to distribute, possibly Friday to distribute. Our target is now what? Tuesday's high or Monday's high. Are we together? I've given you guys free signal now. So we are going to now go into lower time frame and follow that movement to buy. We are buying to take out Tuesday high. We are buying to take out. Okay. So let's check. Let's go to now. We have done for. Let's go to 15 minutes. But before that, I don't want to lines on my charts. Um. So previous day high, previous day close, previous day low. So our normal every single day, we are going to have previous day high. Okay, PDH, PD, PDC, previous day close, and what's previous day low, PDL. Okay, now we are marking all the things that will give us. These are key levels. Everything we are marking here are what? Key levels. Type in key levels, key levels, key levels. Okay, all these things we are marking here, they're not just lines for line sake. Oh. What are they? They are what? They are your key levels. All these previous day high, all these Monday low, all these candle range high, all these markings, they are what? Key levels. When price action around them, don't joke with it. For example, now when I see price closing above Monday's low with a structure, the bias has been established for buy. I look for buy opportunities to take out the high. But when I see price now giving me a bearish structure below all these levels, I'm selling. So all these lines I am marking, they are key levels, key levels, key levels. They are not just lines for line's sake, please. Yeah, they are what? Key levels, key levels, key levels, key levels. All right. So let's drop down to 15 minutes straight up. 15 minutes. Now, by 8 o'clock, we are going to have our Asian range. Okay? This is a sweet buy, my people. This is a sweet buy for us. Without even looking at this much, I expect for two things will happen now. Asian low will be taken, right, into a key level to buy. That's what I expect for a high probability buy setup. I expect Asian low to be taken because Asian has given us like a consolidation. And if you look at the price action safe, this is a clean change of character because on 1 hour time frame we have changed, we have broken this structure. Okay, so I expect for a good, if price does not take out Asian low, I'm not interested with this buy. I am not interested. If price does not trade below this guy, I am not interested. It's going to be risky for you to trade the breakout and buy from here. Price might just come and give you this, and I'll give you this, right? Because the big boys, they have sense. They have sense. They cannot buy at premium. They want to buy at discounts. Okay, so I would expect price to take out Asian low and come back to these key levels, previous day high, previous day close. Look for a key level here. If you have, let's expand this. If there's a fair value gap, there is actually. We have a fair value gap just around here. There's a fair value gap sitting just below the Asian low. Yeah, that's one area of value I'll be interested in. Just below this guy, a fair value gap is here. So I'll be so much interested with that level. So I think that's the level that is below. Yeah, that's the level that is below the Asian low that I'm interested in. And also it's sitting on the previous day high. Okay. So I'm going to wait patiently for today. Right? I'll wait patiently for that. So once I have to check GBP USD. Let's check GBP USD. But this is my bias for Euro USD today. We have taken out, we have the low of the week has been created. From experience, this guy is bullish already. From experience. So let's go to GU first. Let's see what GBP is. GBP USD. Okay, GBP USD. Let's see. I'll go to my daily time frame. I want to see what daily time frame is doing when it comes to the weekly range profile. Daily time frame. I hate GU. I don't know why. GU is not my guy. I hate this pair. You know they follow. So this is GU. Now looking at GU, see, this is Monday, Tuesday, Wednesday. Now, this is what we call Arami. This candlestick pattern is called what? Inside baby, Arami. The opposite of engulfing is Arami. So instead of this guy being an engulfing candle, this is also a reversal pattern. You have a red candle, massive red candle with an inside baby, this candle. So this also has signified a reversal. Now, even if you don't see the low taken out, yeah, this candlestick pattern has signified a reversal. So it's called Arami. That's why candlestick is what is part of, is non-negotiable. If you are a technical analyst, candlestick should be a concept you should not joke with, because candlestick is the language of the financial markets. Open your chart, what will you see? Candlestick. Candlestick is the representation of price on the charts. Candlestick is how price is being represented on the chart. So a trader that doesn't know how to read candlestick is missing out big time. If you are a trader listening to me, you don't know how to read candlestick patterns, candlestick charts. Oh boy. Because for us advisor peeps, this is the foundation. This is what's it called now? Beginner's guide, beginner's module, advisor peeps. We are starting a new module for beginners. Please, if you are an intermediate trader and you know your financial is not yet solid, join that beginners class. It's not beginners class where I'll teach you what is forex. No, My beginner's class is like advanced class. Oh, make I know one you. My beginner's class is like advanced class. We are doing trading from scratch, building the right solid foundation. And so many things that we have ignored. We have grown to become advanced traders, but we have ignored them as foundation. Candlestick reading is a beginner's model. You must know how to interpret every shape of the candle. Look at this now carefully. This is Monday, this is Tuesday. Tuesday engulfed Monday's candle. We are going to be bearish for the next 2 3 days. Simple. Engulfing candle. This is Monday. So this is both CLT. Hey God. This is both CLT and both candlestick. And Tuesday also has given us the high of the week. It means that week we are bearish. Tuesday, Wednesday, Thursday, Friday. Why? Because Tuesday has swept Monday's high with an engulfing candle. We are bearish for the week. Full stop. Am I teaching this morning? So candlestick is one of the edge that we, when I say that we see things that traders don't see, no be brag, no be mouth. Because we understand candlestick, we are seeing price action raw. So understanding how to read candle is very important. It is not about strategy. This is not a strategy matter. This is market price action. So for for GU, this pattern, okay, if you look at this very carefully, we didn't really sweep Tuesday's low, okay. We didn't really sweep Tuesday's low like that. Just slightly. It's like an equal low. So with GU is very crazy. GU is very crazy. GU might want to now do what we call inside bar and sweeping. So G might want to still come and take out this guy, then buy. That's how crazy GU is. Yes or yes? Those that that's why GU is very crazy. So GU always takes liquidity where EU does not. The places where Euro USD will maintain, right? Places where Euro USD has already taken liquidity, GU will not take liquidity. Oh. After EU has gone, GU will now come and take his own liquidity and I'll go. I hate this guy. So, but I'm going to study GU more. Maybe I'll just be taking note of those areas where it will be taken out because GU always takes out liquidity. Yeah, compared to Euro USD. Is that clear? That's one difference between, or we can't comment. I need to comment. I need to comment. I need to comment. So this is what GU is presenting. So let's go to lower time frame. So I'm going to mark out. Okay, let me take out this. I'm going to label my Monday high, Monday low, then previous day high, previous day low, previous day close. Are we together? Understanding how to read candlestick is is what you should not joke with. Learn how to read candlestick. Monday high, Monday low. So from experience, this, like I said, is an inside bar. We are going to target the high. So this is our target. Our target is what? Tuesday high. Our target is what? Tuesday high. That's our target. So it's same thing for EU and GU. I've answered the question. So, but let's proceed. Let's proceed. Let's proceed. Let's proceed. So let's mark previous day's high, previous day's low. Let me zoom this very well. Previous day's high, previous day's low, and previous day's close. Previous day's high, previous day's low, and previous day's close. Yeah? Previous day's high, previous day's low, and previous day's close. I'm also seeing my CIT here. Oh. I'm seeing a CIT here. So let me just do that by the side. Let me put in my CIT gun box. My CIT traders, are you in the house? See out CIT traders. You can just put this CIT just for. Then let's go to 15 minutes and see what the price action according to structure. What is the structure giving us? Let me on my Asian position. Can you see? So according to structure, this is what we currently have. According to market structure, this is what we currently have. So similarly, we expect price to our first point of interest on GU is going to be this demand. Let me go to 1 hour again. Let me go to 1 hour. I think I will get a clearer view on 1 hour. So on 1 hour, 1 hour is going to be a better place to markets. On 1 hour, our first point of interest will be the fair value gap below the Asian low or this demand. So everywhere is demand. All this place is our demand zone. So this is my first point of interest on GU for a buy. All this place here, demand. Because this was the accumulation that led to what? The distribution. How do you know a demand zone? Accumulation and what? Distribution. That's demand. So look at this carefully. All these places were accumulation, then we broke out. So this is the demand zone, right? So that's the first point of interest. Second point of interest would be this range between 0.25 and 50. Then we have 0.75 like that. But first point of interest is what I've just drawn for GU. Okay. And can you see that for GU, the Monday low has not even gotten there. For EU, we are already at the Monday low. So different scenarios. Each pair have its own price action. That's why I always advise stick with one instrument per time because you have different behaviors. You'll be confused. Stick with one pair, master one pair. If you are doing EU and GU, you're on a long thing. Oh. If you are trading EU and GU, you're on a long thing because you'll be confused. Stick with either GU or EU. Right? They have different behavior. Are you together? So we are bullish. So I prefer EU. So let me go back to my EU. I beg. I don't have business with GU GU. I have no goddamn business with with GU. See sweet price action now, guys. Wetin dey happen? See sweet price from daily time frame. Sweet price action. You go sabi wetin e dey do. Last week, although last week gave us a good GU gave us a good price action for itself because for EU, we didn't know that this guy was still bullish as at Tuesday for EU. But GU from Tuesday we already bearish. So e get as take be. For EU, we still had the bullish candle, but we had created the high of the week for Tuesday. Yeah. Now when I say we can't sell, but for GU from Tuesday, you don't they sell till Friday. All right. So it has a way of just know what works for you eventually. Okay. I'm seeing something here. This is a fair value gap, right? So we are currently respecting this fair value gap. Oh yeah, I see. So the reason why we are also respecting that, see, there's a fair value gap on daily. It means that we have to first have a little bit of reversal. So price, we have to first break out of this guy first. Break out, break out, break out. Then we now sell well. Eventually, we are still bearish on the monthly time frame because we are going to take out this low. Eventually, eventually, you are coming to take out that low. But price can't just sell, 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 sell. Price will distribute, will pull back, then we continue. So I think we are in that pullback phase, and that pullback phase is going to buy, so we can take advantage of that buy. Okay, I'm seeing so this is a break of structure. So it's confirming that break of structure, which confirms with our Monday high. Okay, that's nice. So this is a break of structure confirming the same location with Monday high. So that's a confluence that we are bullish. All right. Are we getting it? So we are bullish to get to Monday high, then possibly we now what sell down to continue. So this is just my own bias, right? You might have a different opinion about that, but it's good. That's my own bias. That's my own bias. All right. So I'm done with EU. So give me pair to analyze. So I just wait. I have no business until price gets to my what key level. And of course, I use my 1 hour CLT to now mar over everything. Ehen. If I want to buy, I'm expecting to see what my CLT on 1 hour. Yeah. So 1 hour CLT. CLT officials, no form around today. Oh. Once it's 8 o'clock, 9 o'clock, be giving me the CLT. Pa pa pa. Now let me tell you one thing. You don't have to. The market, yes, accumulation and distribution is demand zone. Similarly, for supply too, accumulation and distribution is the supply zone. Or accumulation, manipulation, and distribution. Just mark the accumulation. The accumulation zone, eh? The accumulation zone is what the demand of the supply. So price can either manipulate first or just distribute. Do you get that now? If price manipulates first, it's a very, very, very high setup. Okay? There are times that price will just distribute. We come to now just manipulate that zone a bit, then now distribute. What do I mean? Look at this. I love the market. Oh. Market doesn't give me vibes. Look at what I mean here. We have a scenario of this accumulation and what? Pull. So price might want to come back and just manipulate this guy and what? And now sell. Because why? We did not create the manipulation at first. So this happens. Trust me. This happens. Because there was no manipulation at the first time, right? So the big boys know that the smart retail traders, you think that, okay, I don't catch them, I don't catch them. They'll put that stop loss, say, Oga, Oga. I have not seen when smart money traders are being outsmarted. Now it be this one. They will give you a very clean supply zone, but they'll still come and take it out. It happens. But when you see that you already have, for example, so this is first scenario. When you see that there is something like this, look at this now. Accumulation, then manipulation and distribution. There's a high chance, yeah, that price will not come back to manipulate this zone again. Lie, lie. They have protected their orders. Even the big boys, of course, they have put their own stop orders here. So, of course, they cannot do themselves now. So in this case now, yeah, you are safe to target this guy, and your stop loss can be here. You see that now? Yeah. So two scenarios. So be careful when you have this kind of pattern. Always wait for a confirmation. When price taps into your supply, wait for a confirmation. Don't just put penny orders and put stop loss here. No, it might be hot. Are we learning? Okay, so let's all right. So that's it for Euro USD. Let's go to other pairs. Let's check out what we checked out BTC yesterday. Let's go to our BTC chart. Okay, my guy is still stalling. My guy has not gotten to where I wanted to get to yet. Can you see? We are still stalling. My supply is here. Let me take this off again. So BTC is still struggling. We are struggling at the supply. So what I'm talking about. Can you see now? Accumulation and what? Without manipulation. So there's a high chance here now that see this guy now. Accumulation, distribution, manipulation, then sell. Exactly. So it's not going to be safe. In fact, it's not even safe. How do I know? Asian high, Asian low has been created here. Asian high, Asian low has been created in the supply. So um dump traders will start selling here because we're in supply zone. Oga, no. We have created a high and a low for Asian range. There's a high chance that this guy will sweep this guy into this guy and sell. So this is an example of what I just said. Accumulation, distribution comes back to manipulate that supply and sell. Are you see that now? So this is what is most likely expected to happen for BTC. So I am chillaxed. I am chilled. I am chilled. I am chilled. I just wait. Yeah? Are we learning? That's for BTC. Let's check out for gold and silver. Let's start with silver first. Let's see what silver is doing. Like I said, for silver, we are already buying. I gave us the um, breakdown yesterday that we are already bullish for silver and gold. We are going to take out this high. I said yesterday that we are taking this. This is a clean CRT that formed on silver. It has taken out the candle range low. We are targeting the candle range high. Simple. But we have to now know. So yesterday, see what the silver do yesterday. Let's look at what silver did yesterday. The price action for silver. So silver did not come to the way we expected. We expected silver to come to this demand or to come to this fair value gap. Okay, I think he used fair value gap. Yeah. It's used the fair value gap. Oh shit. Well, it's fine. All right. So silver used what? The fair value gap. We are bullish already for silver. We have taken out the candle range low, targeting candle range high. So you can see we use the fair value gap. Yeah. And we are what? Boom. Bullish. We are still bullish. So now I think we expect price to now take out this to this demand. So probably maybe now it now respect this demand. Yeah, because that has been a okay. But I'm looking forward to this liquidity. Yeah, Asian low to be taken. Where is it now? This is silver. So we don't rush, we don't rush, we don't rush, we don't rush, right? This is also New York. So our session liquidity, it can be crazy like that too. You just sweep all these guys and come to that demand zone. Mhm. Don't underestimate price action. Oh. These are session liquidity coming to our demand zone. So that's a very safe place to buy at that demand. Yeah. Anything aside from that might be risky. Anything aside from this position might be what risky. Bam. There we go for silver. Right? There we go for silver. Now let's check gold. Let's check gold. Or at best, once we see a break of structure, see another scenario. When there's a break of structure, so possibly it might just come and use the middle of Asian. So once price is breaking out of this Asian high, if it's not going to come down to take a Asian low, at best, it's going to respect this breaker block. So we're going to respect this. At best, I'm expecting price to come here. Okay? At best. But this again, this is risky, right? This is risky. So either here or here. So let's check out for gold. Let me call it a day. So you can see gold did not also get to our level. See my gold prediction. Gold used the fair value gap, just like silver. Gold and silver has the same pattern. Can you see? Gold did not get to my level, but it broke out. So gold used we missed this entry. Gold used the fair value gap also. Gold used the fair value gap also. XAU missed entry. Fair value gap used. All right. So how will I have done it better? How will I have done it better next time? Also, also consider fair value gap. How would you have done it better next time? Also consider what? Fair value gap. So what we did was that we were expecting demand, and so we missed demand zone, which is not bad. Don't feel bad when price does not come to your location, right? Learn how to use other locations too. So FVG was the location that price chose to use. So as you grow in your journey, you start learning other location types. Fair value gap has its own time. Demand has its own time. Other block has its own time. So don't feel bad when one does not meet one. The one that you know at that particular point in time, use it. So if you are a fair value gap trader, you don't chop this one at Ijelo, right? But if you are not a fair value gap trader, you won't have gotten into this trade. Don't feel bad about it. What time frame should you use fair value gap? 1 hour FVG, 4 hours FVG. This is what you should start with. Your fair value gap should be on this time frame. Then you can now drop down to 15 minutes to refine. Drop down to 30 or 15 minutes to what? Refine. But your fair value gap must be on 1 hour or 4 hours. Then drop down to 15 minutes, 30 minutes to what? Refine. Is that clear? So we continue. So we have missed this trade, right? We continue. Um, Gone. So what do we have for today? Notice Monday low. We are already distributing above what? Monday low. So we are bullish. Gold is what? Bullish. Where are we going to? Monday high. Simple. Weekly range profile. Tuesday has created the low of the week. Come on now, talk to me, talk to me, talk to me. Tuesday has created the low of the week. Weekly range profiling. Tuesday has created the low of the week. Tuesday has created the low of the week. We are targeting Monday high. Simple. So we have to now start looking for what location to target this buy. So what do I do? On 1 hour, I am going to be very, very careful. So I'll not miss this trade again. At the middle of Asian range, I have a demand. That's a base. Let me hide this Asian range indicator. Can you see I have this big wick here, right? And this break of structure. So what do? I mark it out. This is a what? Break of structure. Break of structure. This is the higher low. Okay, that means this is the origin. Are we together? This is the origin of that break. Demand. Origin of that break. So that is where I'm expecting for a higher probability. I'm expecting price to what? Use that. Okay. Second option, if I come to my lower time frame on 15 minutes, I will see a recent break, but might be risky. A risky buy. A risky buy would be anything above this guy. So this guy will be a risky buy. It should be a what? A risky buy. So of course, life is risk. If it takes you out in stop loss here, you know it's coming to the next one, right? So these are the locations for gold. But we are targeting this high definitely. So this is the highest probability, the next and the most risky. So what I'll just do is I'll set my buy limit here. I'll set my buy limit here. So in case of anything, I'll set my buy limit here in case of anything. Okay. Then I will now risk these two trades. Okay. My buy limit will be set here as a standard. Then this one too, buy limits here. But I'm going to reduce my risk. Buy limit here, reduce my risk. All right. Then I wait for this last one to happen. So this is gold. Are we learning? I think we are good. Any question? Okay, so let me check out US 30. Let me check out US 30. My eyes are on US 30 also. Let me see what US 30 is doing. Okay. Daily candle. Daily candle. What's happening here? What can I see here? Okay, so I'm seeing that there is a fair value gap on daily candle at a glance, at a glance, at a glance, at a glance. I'm seeing that this is a um, break of structure that created a fair value gap, which is currently being respected. So what am I seeing here again? I'm seeing a fair value gap, a fair value gap. So, and we have currently closed. So yesterday, Wednesday, we confirmed that this guy is bullish. Okay, we confirmed that this guy is bullish because CRT has played out here. Are we together now? I'm seeing it my CRT again here. So I'm going to be milking this guy. Bad, 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 bad. US 30 has given me a confirmation. So I would have started selling from buy from yesterday, but I missed this guy yesterday. I missed this guy. So I'm not going to miss this guy today. So US 30 is bullish. Can you see? US 30 is what? Bullish. And my target is going to be 48,000 because I'm going to use my bank level. I'm going to hold this. I will not fear this time. In fact, my target is my external range liquidity because if you understand ERL to IRL, we have broken structure and we have gotten into the IRL, internal range liquidity. So our target is going to be what? External range liquidity. That's my target. Not even my not even my bank level. So I'm going to use my CIT candlestick, CIT gun box on Wednesday to confirm this buy. So US 30 bullish, gold bullish, silver bullish. So I am bullish on US 30. I'm going to copy. I don't fear. I no go fear. I no go fear. I go put am SL or Range Rover. SL or Lambo. So let me go to my lower time frame and so still on daily time frame. Let me put out my gun box first. Okay. I want to know my levels. I want to get my gun box levels. So it gives me like a confluence, an extra confluence. So I come to 15 minutes, 1 hour, 15 minutes. So I am bullish. My bias is what? Bullish. My bias is bullish. So I just look out for levels to buy. Holy spirits, you are my comforter. Holy Spirit, you make me whole. Yeah, so my levels, I don't expect price to go below this one. So my extreme discount will be 0.75. Okay, extreme discount for a buy. So I don't expect price to go below this one. All right. So 15 minutes. Let's see if there's a demand zone. Beautiful. Can you see? I have seen a demand where I can put my buy limits. This 15 minutes, yeah. Last red candle, I'm going to put in my buy limit there. And I'm going to hold this trade till it gets to 48,000. Are we together? I'm going to hold this trade till it gets to what? 48,000. That's 1 to 7. Then my target will be 1 to 8, thereabouts. Yeah. So this is my bias for US 30. You can join me on this trade if you want. Yeah. Um yeah. So let me set my buy limit now because ProFx also needs to make money. We need to make money. We need to make money. He don't declare. I love that. I love that. I love that. Wiser Pips Institute is a eye cleansing center. Your eye go clear. You go wash your eye. We have come to the month of eye cleansing. So I want to set my buy limit on US 30. We are not coming here to come and play. We are coming here to come and so if you are not trading live or more, you are doing yourself. Oh, US 30 buy limit. US 30 buy limit. US 30 buy limit. US 30 buy limit. Daily time frame. Holy Spirit, you are my comforter. Okay. Yeah. How far now, Sammy? Okay. Samololo, we are just getting started. So this is why for our in our own case, why we stand out from other academies that we don't just give you mentorship, right? Every single day we did together. Now every day. Every single day. Now every day. Other mentorship will just give you those commons in the while, blah blah blah. You can't learn that way. Yeah. So um so let me make an announcement on the power of 10. We are building this together. I said on Monday that we have started the movement, the power of 10. Everybody, we are committed to bringing at least 10 persons into the community. And if they eventually pay for a mentorship fee, you get a commission of 20% of what they pay. If they pay 1 million naira, get commission. If they pay 1 billion naira, get commission. If they pay 10,000 naira, get commission. That's just to encourage us. Then we are starting our beginners class. And like I said, beginners class is not what is forex. We are simply going back to the scratch, building a solid foundation, the basics, the foundation for trading success. So beginners model. Yeah. So if you want to be part of that training, okay. Okay, let me share the link here. What's the Shapa Copa Radius Sophotactius. Beginners, wiser traders. Okay, so don't be deceived when you hear the word beginner. So we are not teaching you what is forex. Lie, 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 lie. So in fact, I encourage everyone to even join safe. I encourage everyone to be in the beginners class. Yeah. So one thing we are also doing in beginners classes, we are also using the opportunity to raise more coaches, because the way I teach by God's grace, I teach with trading notes that you can also be able to teach others. So I give you trading notes that whenever you have that with you, you can also use to teach others. So we're also raising coaches that would also. That's my WhatsApp 0911 313 7436. So that's the link for the beginners class. Invite, share. November 10 to 13 is the class, 7 p.m. daily. Then upper week is going to be for intermediate and advanced class. Let's talk. Let's talk about the market. So, what other announcement do I have to make again? Yeah. So, any question? Our physical class has resumed, has started. But physical class is not for everybody. Physical class is for those that we have the packages already. We have the regular, the VIP, the VVIP, and the exclusive inner circle. For the regular, you must have in your account minimum $100 to join the physical class. Regular, you're not paying for mentorship fee, but your account must be funded. Regular class, physical mentorship, your account must be funded with $100. Then I will drop the packages on the group or on my status. You can see on my status. So if there are no questions, I think we are done. We are good for today. Let's keep studying. Let's keep back testing. Let's keep studying. Let's keep back testing. Let's keep journaling. Let's keep reflecting. Right. And we're good to go. Yep. All right. So if there are no more questions, I think that'll be all for today. Yeah. So this will be my first 1 to 10 trade for the week. Good. So that'll be all for today, guys. See you guys. Tomorrow is Friday. Same time, same station. Let's keep, let's keep up the work. Locking. Someone type on chat box locking, locking, locking. Let's go. Type in locking, 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 locking. Type in locking, locking. It's time to lock in. 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 Okay. It's time to lock in, guys. Yeah. Yeah, the gun box. Gun box. Yeah, that's true. So gun box. So let me end with gun box. Where do I start from now? So let me explain gun box to us. So basically, what gun this is gun box. When you come to your settings, okay, under the gun box, under the Fibonacci, you see Fibonacci and you see gun box. So gun box for the first time, let me switch to default. For the first time, you're going to have it like this. Okay, gun box for the first time will be like this. You have your time and your price levels in your gun box. Okay, the vertical line are your time levels. The horizontal line are your price levels. So the chart is all about time and price. Story for another day. I won't go into that today. So we have the time levels, vertical line, and the price levels. You only want to be interested with the price levels. So I will edit my gun box and I will remove all the time levels. I edit all the time levels. I untick all the time levels, all the time levels. I untick all the time levels and take off the background. Even for the price levels, I take out the background for the price levels too. So for price levels, you can see, I bring it out. I only want to see 4 lines. It's called the quadrant. Quadrant, 4 lines. I want to have my 0 and my 1. 0 and 1 is the first two. So 0 and 1 is the range. 0 to 1 is what? The range. In the middle of the range is 0.5. So let's start by taking out everything else and just leave out this. Okay? My 0, my 1, and 0.5. This is the equilibrium. Now, I now break down again into 2 again. So in the middle of 0 and 5, I have what? 0.25. In the middle of 1 and 0.5, I have what? 0.75. Full stop. What I've just done is I have just given the price a box quadrant. So my overall range was divided into half and divided into quarter. So this is the standard Gann level. Standard Gann level. And they serve as retracement levels. They are also powerful key levels. And they all have how to be used. So now, for a bullish candle, if a bullish candle is formed, you want to mark your Gann box from the high to the low. I repeat, for a bullish candle, you want to mark your Gann box from the high to the low. Bullish. Are we writing? Bullish candlestick, high to low. What I'm teaching you guys is what you guys should pay for, but it's fine. Isha, one day I'll teach it. I won't teach this thing again. I'll just teach it today. And if you want to get the knowledge again, you come to mentorship. Sorry, bullish. Bullish. Bullish, high to low. Okay. Um, this is for bullish. Now for bearish, let's go. I'm going to change the color of this guy to red because bearish represents red. For bearish, I mark it from the low to the high. Bearish from the low to the high. Are we together, guys? Mark your Gann from what? Low to high. So what does this mean? It's just like a Fibonacci retracement, but in this case, there is no extension. All right, there is no extension for Gann. There is no extension for Gann. Please appreciate this thing that I'm giving you. Let me shock you. Most of what those things I'm telling you, I didn't learn them from anywhere. It's by studies. One or two information from here and there and studies. So you can also get insights from the market when you study. It's available to everybody. Yeah. So this is the first thing that you want to do. Okay. Then so secondly, for a bullish now, when a candle, so when the previous candle closes bullish, that is where you will mark this Gann box on. So we use the Gann box to anticipate the next movement of the candle. I repeat, use the Gann box on the previous candle to anticipate the next candle. So Gann box is used for candle impulse theory. That means the previous candle has closed very impulsive, whether bullish or bearish. That is where you're going to mark your Gann, because the next candle will have to retrace to continue. So we are going to retrace into either of these levels. Okay, I'll give an example. I'll come to the chart to give you a practical example. So let's come to the charts for this same US 30. Let me show you a practical example here. Let me show you a practical example. These 4 hours, right? These 4 hours, right? Now watch this. Watch this magic. Come on, come on, come on. Watch this magic. Watch this magic. Can you see that this is a bullish candle on Friday, right? On 4 hours, bullish and impulsive 4 hour candle. Because of the of our location, we have seen that okay, this guy came into this demand, right? And we broke out with this massive green candle. How do we know how to trade the next 4 hours? We are going to mark this candlestick from the high to the low Gann box. Okay, this was the demand zone. This candlestick has broken out of it as a confirmation. How do I continue on this momentum? I mark my high and my low, and I drop down to what? Lower time frame. Now, in every range, there is a key level. So 0 to 0.25 is level 1. 0.25, 0.5 is level 2. 0.5 to 0.75 is level 3, and this is the last level. So in every range, there is what? A level. I come out to what? From 4 hours to 15 minutes or 5 minutes. And I will check in. Let's go to 15 minutes and see. Can you see? On 15 minutes, you're going to see price action that aligns with your Gann levels. Can you see? What do you have here? In between 0.5 and 0.25, we have this first point of interest. Bam. So you don't know which one will be used. You don't know which one will be used. You have to use your intuition and backtesting to know. So 0.25 is a risk entry. 0.5 is most likely going to be a very conservative one. 0.75 is your extreme discount. So from 0.5, you'll be anticipating a good buy position. In fact, there is no even location here safe, right? It's very clear that this is the first location you have. Yes or yes? Abi now, this is another block that was found in this range. So that is already your first point of interest. So we are combining Gann box, okay, with what? Price action and market structure. So it's a combination. You are combining Gann box, then you drop down to lower time frame with your price action, market structure, other block. It is combination. So you cannot leave one, and it's just a confluence. Gann box just helps me for an extra confluence. It makes me see what others are not seeing. Okay, so Gann box just gives me that extra confluence of key level to see what others are not seeing. It's not compulsory to use Gann box. Are you getting it now? I won't force you to use what I'm using. You can get your key levels any other way. But me, I'm seeing what others are not seeing. So it's a double confluence for me. Do you understand that? So it's what I teach in my privates in the mentorship. It's not a general knowledge because I don't want everybody to know it. Do we get that now? So we will do more about Gann boxing. It's a mentorship class. It's not a yeah. All right. That is why currently on US 30, I'm applying Gann box currently on US 30. So let's go again, right? Yeah, so currently on US 30, I'm applying Gann box currently on this daily time frame. I showed you guys now. Right? Can you see it? I'm currently applying Gann box on this daily candlestick. Because why? This guy has printed out bullish. He came to my fair value gap and closed above. So I'm applying gam box on this guy from the high to the low, just helping me to know my what? My extra confluence of levels. And going to 15 minutes, I saw that okay, wow, there is what? An order block. Can you see? We are back here again. An order block at my what? At the 75 level. This is it. There is an order block resting at what? At the 0.75 level. And price is coming there. So for me, it's just that extra confluence. It's just that what? Extra confluence for me. Yeah. Do you see that now? Okay. I think we are good for today. All right, 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 all right. So thank you all for joining. Any more questions would relate to me. And again, don't be afraid to take a loss, right? Take a loss. If it goes wrong, check what you did wrong and go again. Afford your risk, afford your loss, and move on. Right? Don't be afraid to take a loss. All right, guys. So that'll be all for today. Thank you for joining. Ciao. Peace out. Thank you all. God bless. God bless. God bless. God bless. God bless.